All right, well, that's our mantra, and so far so good. People don't realize that I am a spiritual person. I might not have one specific religion that I adhere to. Rastafarianism, Judaism, Christianity, Buddhism, all that stuff. It's all rolled up into one thing. But we're not here to talk about my religious ways. I'm here to talk about the spirituality of the market and what I just did. Now, you guys, maybe you don't realize the reason I started making videos on YouTube was to poke fun at myself, yes, but also to expose some of these cretins that my dad used to go to these seminars for, how they make trading is the easiest thing in the world, and all you're going to do is follow their lead, and you're going to make all this money without actually having to think for yourself. Yeah. And then it was fun when I was doing nothing right, you could trade against me. Now I'm doing a lot of things right, but people still think they could trade against me. But the real point of this conversation today is that you shouldn't believe the guy on YouTube. That's why you should come and test him out in live atmosphere every day. So what did we do today? Today was a perfect example of how to trade. It was phenomenal. We had a lot of short squeezes happening at the beginning of the day, like VRX. VRX opens up strong, and one of our new guys says, should I be buying here at the open? It looks pretty active. And I said, for the love of God, don't buy at the open. Gap ups are meant to be shorted. And if it decides to go up without you, so be it. It's just one other trade. You want to be shorting here at 1150. So when it breaks down and crushes everybody's hopes and dreams, then you can make money shorting the stock. And then when it finally stops going down and makes a new range, that's when you cover and you go long. Which for us, when it hit 1057, wasn't the end all. I wanted to see it bounce, come back. So not only were we covering shorts, but we covered shorts on the way down because you love taking money on that first trade. So VRX short, made about 20, 30 cents on that. But then the fun trade came in by buying the stock there at 1075. And our goal was to get back to 1150. Why was 1150 our first goal? Well, it's because most people who bought it at 1150 were sitting there hoping and praying that it's going to go back to 1150. So chances are it was going to test that 1150, 1153 area. And the guys that did do some dollar cost averaging, the courageous souls that they were, got in, and you know they were looking for 1150. So not only were we looking for 1150, but then if it could break 1150, 1153, that opening tick, we said, let's get this to 1170. Why 1170? Because 1170 was the pre-market high that it hit. And generally when you break the opening range high, you will get to then the pre-market high where we sold VRX and the VRX options. I believe some of the guys bought some VRX options at 1170, which right now at 12 o'clock p.m. remains the high of the day, where the Hit the Bid crew collectively dumped VRX, let's call it between 1150 and 1170. Phenomenal. But that's not where the party ended, my friends. No. We took all that money and we piled into Alibaba, because I don't know if you've been watching the videos, and I know you shouldn't be following Schmuckhead on the internet, but I've been making it perfectly clear that Alibaba has become one of my favorite stocks. I believe the stock is going to, I'll go ahead and say 1,000. What I think is going to happen is once it breaks 120, it's going to go to 150, and then they're going to do 151 reverse split, and they're going to bring Alibaba down to $1, so then everybody could buy Alibaba again at $1. And they're going to run it to like 500. So in theory, Alibaba might be going to 5,000. Now, am I suggesting you buy Alibaba options and hold it for the next 10 days into their earnings report, hoping and praying that all that I just said comes true? In a way, I guess I am. But you know what? If you own the 117s at $1 and now they're 4, I'd rather you be in that trade, because now if it doesn't work, it's not like you're losing new money, you're just losing some of the money that you already made on the Alibaba. So What did I just say? I don't know if I said anything, but I still like Alibaba. And if it breaks 120, I think it's going to 150. But you've got about 8 more days of it trading before they report, I believe, next Thursday. Don't quote me, I might be wrong about the day. And then we got the triple D. The triple D, which was gotta be, and again, you have no reason to believe me, but I called this thing on Friday to break out because it engulfed a candle. You had a candlestick high print. It hit the 1705, pulled back, didn't break down, and that was where we got convinced. We were long from 1685 and 1710, and we held it the entire day, and we still own it right now. And sadly, we got the gap down today and the sell-off, and we still didn't buy more because we're just a bunch of nervous freaking Nellies. This is why I explained this is called the reverse greed trade. Because we sold some yesterday, and we did really well with the DDD. We were pissed we didn't buy more on the way up, and then we said, well, if this thing pulls back, we'll buy it back on the pullback. So this is where reverse greed comes in. You're so proud of yourself that you sold some, and the stock's going down. And then it breaks 18. Who's better than us, right? We sold it, it's going down, it's exactly what we want. And then it starts to bounce. And then you're thinking, all right, well, let me just wait out for a couple of minutes. Maybe it'll roll over. Well, maybe it won't. Well, maybe I'll just wait. Maybe it'll roll over. Maybe it won't. And then you're trapped because you just missed a good entry. You don't feel like chasing it. You're hoping that it pulls back because it just pulled back. But then guess what? The pullback's over and the stock's already back to $19. And you want to just bash your head against the keyboard. I understand. Reverse greed gets you. Because let me tell you, when the stock broke 18, your immediate thought should have been, maybe this thing pulls back to 1750. Or at least that 1785 area, which was a spot from yesterday. And just in that one moment of hesitation, you got the quick bounce above 18. One guy said, should we buy it at 18? I'm like, oh, well, just wait. Next thing you know, it's at 1820. Well, maybe we should buy it now. And then it's at 1850, and now it's at 19. And it's another missed opportunity, and I understand. I think missed opportunities are worse than losing money. Because it's almost the same. Because this is the money that you should have been making, and now we're not making it. Some of you guys probably own some DDD, and we still own it, because I still think the stock's going to 22.50, maybe 25. You know what? Anytime I own a stock, I might as well put an outlandish price tag on it. I'm going to go ahead and say DDD goes to 36 bucks. There it is. Throwing it out there. Mock me all you want. But you know what? I'm in from 1685. The stock's at 19 bucks right now. I still got my original 200 shares. Blah, blah, blah. Did I buy any more today? No. Did anybody in here do it? I'm not sure. I might have talked you guys out of it. Talking? Is that a word? Talked you guys out of it? But I love this stock because it's in the midst of a short squeeze. And they manipulated it down. You know all you cretins out there and you losers that are in some shitty stock and somebody bashes your shitty stock on StockTwits or on some message board and you say, oh, they're just shaking the weak heads out. Oh, they're just trying to shake the trees. Oh, they're just trying to get you out of your stock. In Triple D, that's exactly what happened. Not on your shitty biotech that's been sitting around at $4 for the last 3.5 years and goes down to $2.50. Oh, they're just, it's just the market makers manipulating it. Just shaking the trees out, getting the weekends. 8 years later, you're still in the same bullshit stock at $8, at $4. You're telling all your friends and family how great their drug was. Meanwhile, they're not even pushing the drug that you bought the stupid stock about. You're getting 10 Qs and 10 Ks, and you're sitting there on conference calls. Oh, shit. Oh, the EBITDA. Oh, shit. Really? Next thing you know, your stupid stock's still $3. No, that's not what just happened in DDD. DDD, they just shook your ass out. Gapping it down, shaking out. It's called the faux show bro. First you get the fake out, right? You get the little fake out, and it tries to rally, right? And they roll it back over for a little bit, right? You get the fake out, and then you get the shake out, and then you get the breakout right there. It's the faux show bro. You got faux show broed. That's what happened to you. All right, goodbye.